The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to take a look at the DAX to start off with this morning, like we usually do. However, immediately after looking at that, we need to take a look at a few of these currencies because there's some interesting things happening. As you can see in the DAX here, there is a potential, and the key word here is potential. Hold on 1 second, please. Okay, if you would take a look at this DAX index on the daily chart, and then what we're going to do is we're going to look at it on the weekly chart, and you can see that potential, and the key word there is potential for the DAX making a weekly chart. We had a question, someone from Terry in our den here. Terry, if you're looking for a really good charting package that doesn't cost anything, go to tradingview.com. It does all of the patterns that Ensign does with the exception of the Pesavento patterns, and it does all kinds of things. You can program within it. You get delayed data for free. I don't know how much the live data is, but it's really good. I've seen it, and it's something that is really good. Actually, John Jameson, who I'm going to be doing a webinar with on the 16th, uses it, and it's really quite it's very, very useful, and of course they make their money off the free advertising and stuff, and that's what we're watching here, folks. There's just about every single currency that I'm looking at is making a very important Fibonacci retracements today. Let's just go back and look here at the euro. We'll just pull this up, and this is the one we've been watching here on a 60-minute for quite some time. We'll just look at it here. No, Ensign's not expensive. It's only $50. What's expensive is the data feed, and that's where TradingView will give you 15-minute delayed. And believe me, 15-minute delayed is no big deal. It really isn't. In fact, that can actually be an advantage. So take a look at it, Terry. Let me know what you think, because I really think it's very, very good. I'm a creature of habit. So anyway, it's just look at it. It looks pretty good. Okay, your assignment is to get back with us and give us a review, okay? Because there's other people that probably would need that. Anyway, let's take a look at this euro. As you can see here, we made that head and shoulders pattern. We had the big reaction. We had the rally back exactly to the 61% retracement at that 117.80 level. And now what we're doing is we're pulling back to a 78% level at this 117.30 level. I believe we're trading a tad or two below that right now. We're trading above it right now by 3 pips, so we'll see if that's going to mean anything or not. So watch it. The other one that looks really well, all of them do. You look at if you trade currencies, you really need to look at every single one of them. I can't get them all up at once. I put up the euro chart. I think the euro chart's up there. I hope. Let's put it up here again. There we go. And but that's in there. So that's a real interesting one to look at for sure. And the other one that certainly has a real interesting one to look at is the British pound. And this is the one that I was looking at in the middle of the night last night. And there's no such thing as the middle of the night here in Tucson. So let's just take a look here. We'll put this up here. You'll see the British pound. This is a 4-hour chart going back 4 months. We're making a 61% retracement of the low from August the 20th. We're making an exact 50% retracement from the low way back in June, and that number comes in at 131.30, and I believe we're within a heartbeat of that right now. That spot on. Very good. That's it. 131 is 131.30 is the number on that. So keep an eye on that. Now, the good part about that is if you decide to buy it with those ABCD patterns and stuff that are there, that gives you a little bit of an advantage. But the main thing is that you've got going is how much you're going to risk, because usually within $300 of this, you're not going to have too much of a problem. Now, there's another part of this British pound chart that you should really look at, folks, and that is there's a really nice ABCD pattern starting around mid-September, around the 15th to where we are right now, and you can see the ABC structure, and the BC swing was right almost exactly 382. So that's another thing that you got. So you got three factors saying that this pound should be bottoming somewhere around this 130, 130 level. That's what it looks like. And remember, since we have so many of these, the Australian dollar's doing the same thing, the Canadian dollar's doing the same thing, the Japanese yen's doing the same thing. They're all hitting major fib points, and so this means that the U.S. dollar is most probably getting ready to weaken a little bit. Now, that's just a probability. That's pretty much what we're watching here. Now, let's just get to where the pedal meets the metal. Everybody wants to, just one second here. I want to get this up here. Let's just look at one other thing as we're watching this British pound. I wanted to show you something from one of our friends over in Italy. Sent us a really nice chart of the British pound on a daily basis. And as you can see here, this goes back into February. You'll notice that you've had three major corrections, and the third one comes in right at that same level. So you see the harmonics that you're looking at here in this British pound. So this is very, very important. And as you notice, he points it out that that's at the 50% and 61% retracement of the previous swing. So it's worth looking at. That's the main thing. See, that's the good part about patterns is that you don't have to listen to the news, and it's only it's just numbers and it's just lines. That's all it is. I got an incredible phone call yesterday, folks, from my teacher, John Hill, who I met in 1970. He introduced me to the ABCD structure, and he also introduced me to Don Mack and a whole bunch of other people, and we've been friends for many years. John is now 91 years old, and he keeps certain books right there by his rocking chair there in Hendersonville, North Carolina. And one of the books was my book, Trade What You See, and he said that he thought it was one of the best books that he's read. And boy, when someone like that tells you something, you just that really made my day. I really felt good about that. So he really made my day. Anyway, let's just move on to he's doing great. He still plays golf. He doesn't play tennis anymore, but he does play golf, and his mind is still as quick as ever, and does everything he used to do. So not a big deal, but anyway, I met him in wow, it's hard to believe. I met him in April of 1970 in San Francisco at the Cycles Conference. All right, let's move on to some of these other markets that look real interesting here. We've got another one here, folks, that is we've been watching it for about 2 weeks now, and it's right up at the ozone here. Hold on one second. We'll talk about it in just a minute. It's the old red metal, copper.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, before we talk about copper here, I want to get a little commercial in for the webinar that we're going to be doing with John Jameson from the UK. He's been a friend for, well, about 16 years, but boy, he is really smart. And we were going to do this together. But after I listened to what he had to say, folks, he's going to be doing most of it. I'll be, adding some things as we go on. But this is really a no-brainer for you. It is some of the most interesting things I've seen in all of my years. It's all based on statistics that, that I really like. He just looks at them differently. It's going to be focused on the E-mini S&P, which I know a lot of you folks trade, and then also the euro. You can use it on any market that you want, but it's really amazing to see what this really happens. It'll be really interesting to see if you like it or not. It's a no-brainer. If you don't like it, you get your money back. All the subscribers, of course, to 24/7 are included in it. But if you do want to watch it, just sign up for it. It's really worth the price of admission, because he really has some great information. I've been through it 3 times now, and each time I've listened to it, it's just great. So it's something that it's a lot different. This is someone outside the family of TFNN, but boy, he really knows his stuff, and I know you'll enjoy it. You can see the copper here. We've been waiting for this price here of 302, 303. We've hit 302.60 today. If this gets above 305, this would be a bad pattern, but we are having a 38% retracement. And you'll see that we are looking at a possible sale up in here, but it needs to stop below 305. That's the key thing in the copper. So whether that's going to happen or not, we'll wait and see. Now, we've had a request to take a look at the structure for heating oil, and we'll bring this up here. We've talked about this before, of course, and I feature this one in the newsletter and 24/7, and you'll notice that we made a perfect 1.27 there just about 5 or 6 days ago. We broke down, and you'll notice that it stopped exactly at the 382 level. This is what we were expecting to do. This was we had the two bad days, but the 382 level held it perfectly, and now we're having a little bit of a rally. Now, you have to make a decision here. You're either going to believe that it's going to go up to the 2.10 area, or that this rally back is going to fail. So if you're bearish, you've got a really good place, to plan a short sale. And what you would do is you would take this last rally that we're having here and figure out what the 61% retracement is from point D down to the low that we made 3 days ago. And you figure the 61% retracement or the 78% retracement, which one of those you'd like to, put your game plan on. Move down to, say, a half-hour chart and see if you can find a nice ABCD structure on that at the same time, and that would give you a pretty good indication of what we're going to do. Since we're doing that, let's just do that together, since it ought to be something fun to do. So let's just do a 30-minute chart here on the you'll be able to see it right here. This just is real easy to see. Let's just put this up here. You don't see the ABCD structure as well, but you do see, let's just get this up here, you will see that the 61% retracement comes in at 1.1875, and the 786 is 1.837. So that's what you look at. But you don't have a good ABCD structure between yesterday and today. So you'd like to see that happen. So that would make it an ideal situation. Otherwise, you're just selling into that rally, which is still okay. But that's it. If you're really bearish, you're almost at the 50% level here in heating oil, and you could do it there if you like. So that's where your decisions come in of how you're going to take the trade. You're the one that takes the responsibility for it, and believe me, not all the time is it going to line up perfectly, but that's what we're watching here in the heating oil. And the crude oil still looks rather bearish in my opinion, and so we'll see if that's going to be the case. Now the euro has now come down and hit that 78% level at the 117.16 level. Unfortunately, I bought it at the 61% retracement, and now it's come down to here. I risked 30 points, so another 10 pips and I'm out of this, but that's the way it goes. Anyway, we'll watch it and see what happens. But anyway, it's right there. The British pound has hit it too. We're right on that spot for the British pound. So we're going to be taking a close look at that. My mistake in the euro was I probably should have considered the wider range, but actually the range wasn't that wide at the time. But this is not going to work in my opinion, so I will be moving on to something else later this morning, that's for sure. Okay, let's move on to one other one that we're going to be watching today, and that is the gold market. Folks, this gold market just doesn't have any friends at all. The last rally that we had from yesterday to today stopped exactly at the 78% level at 1281. We've now broken $5 to the downside. So that's telling us that, this gold market just wants to go lower. The question is gold going to be as interesting as what we look at with the, hold on one second here. Someone's asking me a question. Folks, when you buy the euro at 117.30 like I did, okay, and it goes down to 117.15, that's only 15 pips. You got to risk about 30 pips when you trade the euro. Otherwise, you're in the flutter of the market. So, you're only out $100 if you bought it. Now, it may or may not work. All I know is that the pattern is there, and, that's all you can do. Okay, let's move on to what we were talking about with the gold. Gold to me, folks, we are still heading down. We're $30 away from the 1245 level. I don't see it stopping before that. I frankly don't. It's just got so many things pulling it down that way. It stopped exactly at that 382 level at 13.18, and it just looks lower. And the XAU looks pretty much the same thing. You know, we'll say take a look at. I see that Mr. Z is on the other side of this copper. He thinks it's going to go to 1345 and at 345, and it certainly could. That's basic it. It's got to get above 305 in my opinion, and then I will say, yep, I will bite the bullet and then you know, move on to it, but we'll just keep a close eye. Remember, this is a full moon day, folks, and this is the last day of the Bradley date. And we're going to cover that when we come back for the big break, because we need to spend a little bit more time because we're over such a critical level. And I've got to get on my soapbox and, you know, talk about it one more time, you know, to look at it. But anyway, that's it. Here's the heating oil chart that we posted for the newsletter this past week, what we were looking for crude oil to happen, heating oil to happen. As you can see, excuse me, you came down exactly to that 382 retracement. And folks, that was exactly the same correction that we had back in August. It dropped the same amount. That's why, you know, I put that in there to show how it repeats over and over again. So that's the one thing that we want to watch, because it's relatively important based on, you know, what we look at here. All right, that's it. We're going to take a little break here, pay a few bills for Mr. O'Brien, and then we'll be right back, and we're going to be talking about your all-time favorite, the old Bradley model. And I'm feeding old Walter the burro as we speak.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh dear, hold on, boys and girls. I'm trying to do something technically. Okay, here we are. This is it. Oh, Walter, just a minute. I'll get your hay for you in just a second. Hold that feisty little burro that I got over here in Tucson, Arizona. Boys and girls, let's go back into history, okay? Today is March the 5th of 2009, correct? And we're going to take a look at the Bradley model. And here it is. This is the Dow Jones Industrial Average with the inverted Bradley model, and it is showing that there is a potential for a bottom in the stock market of major proportions. As you can see here, the big red ABCD, known as the Thunderbolt pattern, ABCD pattern, finishes right there at the old price of 64.60 in the Dow Jones Industrial Average. It's also a 3 drive to a bottom. The BC swing is exactly 1.618. And guess what, folks? We had a rally that started in March of 2009, and guess what? Today it is still continuing. Let's take a look at the model right now to see where we are. The reason why I'm putting it up is because, you know, maybe this will be the second time this will be right in the last 10 years. Hold on, that's been right a lot more than that. But let's just put up the Bradley model right now here with the, and this is the inverted one also. Take a look at this. And just use it for your own benefit or whatever. You'll notice that we do have some ABCD structures here, also in the Dow Jones Industrial Average, and they close pretty much right where we are right now, right around this 22,700 level in the Dow. And that's what it looks like. And the Bradley model now is similar to what it was in 2009, where it goes down for well over 13 months, if that is in fact the case. But it does have a lot of similarity. I thought it would be interesting to see what it was. Yes, Ed Young was one of the best. Boy, I really enjoyed Ed. We were very good friends, and boy, he died very, very young. Anyway, by the way, if you're interested in that webinar that's going to be on October the 16th, just go to the TFNN page, and front page, and you can sign up. But you're going to enjoy it. Flat out, I can tell you that right now. I know that, because when someone can keep my attention span for an hour and a half, that's really something. So anyway, watch it very closely, folks, because it's really it's going to be interesting to see, what happens with it. So anyway, that's what we're paying attention to this morning. We've made new highs now in the New York Stock Exchange Composite. That was the last one that had been holding back, but with the big run-up we had last night, we were able to make new highs. Even the Dow Jones Composite, the NASDAQ Composite, I'm sorry, and I'll post it up here. You'll see that we have a double pattern also here, and hold on, I'll put this up here. Now, the other thing that you guys are asking me too many questions at once. The heating oil, the question that they're asking is, you have to wait to see what area you want to sell at. You have to pick an area. You have to pick the 50% level, the 61% retracement, or the 78% retracement if you're selling back. The reason why it's difficult is because you don't have a 15-minute ABCD pattern or even a 30-minute ABCD pattern there to give you any help to say that this is it. So you have to either sell at the 50% with your stop above the 78, which is way too much in my opinion, or just be patient and wait and see, whether the pattern will complete the way you want it. And there's always that possibility that the pattern's not going to complete the way you want it, and you're going to miss the trade. So it's not an easy thing. The one thing you will know is that if you make new lows now in the heating oil, taking out the lows of just yesterday, that's telling you that the 38% retracement that was forecast is broken, and now you're getting ready to head a lot lower. That's the bottom line of what you're looking at when you're following that. There's no other way to look at it. I'm not going to Oh, by the way, I did want to tell you we talked about this open interest stuff in the E-mini and all this other stuff, folks. All of that has been negated. There has not been any decreases. There have been very slight increases in a few of them, and a couple of them were unchanged. But there's not been any big decreases this week, other than the one day. So 3 of the 4 days have been basically slight increases in the open interest, which means the market is still on a bullish scenario for the upside. So that's primarily what we're looking at here. So those are the main things that I think we need to cover for today. It's primarily just a lot of things happening. There really are. Arch Crawford, of course, told us about the new highs to new lows, and the fear index. All of these things are present. So it's just ripe. But whether it's ripe enough to go down or not, we have to be patient and wait and see. This is Thursday. We got tomorrow is Friday. Boy, that's a big revelation. And so if this is correct, we're not going to be up next week in the market. That's what it should do, but we'll see. I did write in that 2009 letter that if we went lower than where we were on March 5th, that we were probably looking at something that nobody wanted to talk about. And but I was very bullish. I mentioned in the letter that it was going to be the biggest short covering rally that the stock market had ever seen, even surpassing the one from 1938. And it surpassed everything and broke every single record that can be broken, as it should have. It's been up for basically 10 years, 10 and a half years. So that's one heck of a bull market. Okay. Now, I want to bring one other thing to your attention. We've been talking about the grain markets and stuff. We've held some pretty good support level in these grains here into the full moon. The one that we were most friendly to, of course, was the, hold on one second, and we'll put this up here. We'll put this right there, and we'll be looking at it. You'll see it had the 78% level, and now we've been able to rally up into the well, about $500 from the well, $600 from the bottom. So you want to put your stop at break even in that oil if you decided that that's what you wanted to do. Wheat has also come down and touched the price level. The corn level, we were waiting for 340, but we haven't quite got there yet. We've been down to 346, so we're still sort of waiting for that one, but we'll wait to see here. Okay, let me see. Someone's asking if the Dow Jones made 22 days. Oh, there's a move. 30. One of our friends from Florida is talking, in fact, that there's been some moves of 23 days from June 29th and August 21st, and the 33rd day will be tomorrow. So that would be pretty close. To what we're looking at. Folks, this is the stuff that pattern recognition and astrology is based on, whether it's going to work or not, but have to wait and see. I really didn't think it was going to go up from September the 15th until October the 2nd, but it certainly did, and that's it. Mutual funds, folks, they don't have any skin in the game. And so they make the rules the way they look at them. In fact, these mutual funds are hurting really bad because of the ETFs. They really are. 877-927-6648. Wow.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and we had a question about the silver market. Silver, I don't trade it very often because it just is a lot less liquid than the gold, but it also looks like it certainly wants to go lower. That's the key thing that I think you got to keep in mind. The gold just does not have anything positive right now. I mean, it just got so many targets heading towards that 1245 level, that it looks like it's something that that's just looks like that's where it wants to go. You know, that's basically, you know, the bottom line. So I think that if we take a quick look at the crude oil market, we were talking about heating oil. You'll notice that in the crude oil this past week, we were looking for the market to come down and test the just below the $50 per barrel level. We've done that. I believe we're trading at around 50.25 right now. So that would complete that correction if this is still a bullish pattern, and I'm not so sure that it is, but that's what it's done so far. Now, you'll notice that retracement that we have, that BC, was exactly a 38% retracement. That was just right at the $50.10. We went to 49.88, which is within the ballpark of that 382. It's within a couple $100. So it's certainly in an area, you know, what we're watching. So that's something that we want to keep in mind on. One of the things that we talked about yesterday was that potential for the NASDAQ to make that 135 pattern with the big move that we've had today above the old highs. You know, that certainly negated that. The fact that the Dow Jones is not moving very much, and the fact that the other markets aren't either, but the NASDAQ has certainly shattered that 135 pattern, and that one is not that one is not working. We have one other question here I better cover. That's about these lunar cycles that Norm Winsky talked about yesterday, the full moons and new moons. Folks, those are usually cycles that are short term, 7 to 8 days, but they're very good for timing. This goes way back to the Babylonians and the Sumerians writing on tablets, many, many thousands of years ago about wheat with Mercury and the full moons and new moons, and the Farmer Almanac is full with that stuff. But what we try to do is to match it with the patterns, and we'll see what we're looking at. So we'll watch as we see these things going. And believe me, we could certainly Steve Rhodes is giving us some information about the March light low this month. Since March 19th, which month has the best returns? He's saying since March 19th, and someone's saying October. I don't know what that is, but Steve is going to give us that answer, aren't you, Steve? So we'll wait till we'll wait to see if that is the case. Anyway, Steve, let us know what that is, because those are the kind of statistics that John Jameson works on, folks. If you're interested in that, but what he's done is it is October. It's a 3.5% move. So we'll see. Anyway, this is the kind of stuff that John Jameson works on, is the statistics of the market, and lots of numbers, folks. I mean, with lots of samples, but he brings it into easily understandable. So I think you'll enjoy it. So October has been the best month, which is against all history and seasonal cycles and that stuff, but that's what we're paying attention to right now as we're watching these things. So we're almost back to even in the euro, so we don't want it to make new lows. Anything below 117 even in the euro, that would not be good, but we'll see if it's going to hold this level or not. It's you're bouncing around between that level, and we'll see how these things end up. So those are a couple of the things that we're watching. As far as guests for next week, I'm trying to get our good friend Bill Meridian back in, and then also Stan Harley. Stan's up here in Arizona now, or down here in Arizona now, so we'll be able to get him on more frequently, I think. So we'll get both of our cycle people in and see, that certainly the September-October move down didn't work this year, but that's the way it goes sometimes. Sometimes it's chicken salad, and sometimes it's other kind of chicken. So anyway, we'll watch those, and we'll get those guests on to see. Let's talk about the bonds for just a little bit, folks. We hit that big number up there at 153.08 twice now. We're still heading higher. Interest rates look lower, not higher, to me. So we've seen this, over and over again, that the market wants to go a lot lower. Our price objective on these is, if you'll notice here, we're trading pretty much where we were before at 152.19. And if you'll notice that, if you'll look at this ABCD structure on this is going to take us down to match the low from last May. And this is really this does want to go lower. That's basically it. If you'll notice that 153.08 level, that was the other 382 retracement on the 4-hour chart, and that's still telling us that we want to be heading, to the downside. You're right, Duffy. Sometimes the magician is not on his best form, but that's it. That's why when you go into the forest, folks, you have to expect to kiss a few frogs before you find the princess. That's the way the rules work. I'm sure you've all seen the Sleeping Beauty, and if you'll notice that prince had warts all over his face from all the frogs that he kissed before he found the princess, and that's what you have to do. But believe me, folks, you got frog repellent on today with this stock market, because pay attention, because if you're down tomorrow, this is nothing more than a false breakout, and we're going to see something very similar to 2009, only upside down. That's my prediction, looking at the Bradley. This got all the similarities to where we were. The problem is volume is 40% less than it was back in 2009 because of all the other stuff that's out there. All right. Question about algorithmic trading. Folks, I know very little about it. There's a lot of it going on in Wall Street, but those people's frame of reference is very, very very, very short. It's just usually a couple minutes, and that's just really no way that I can do that. So we'll see what happens, and we'll move on to some of these other things to look at as we walk through. It seems to be more interest in gold today than anything else, but it is a setup for potential failure in the stock market. But again, that's a potential. You should really wait until tomorrow, because this is the full moon. Wait a day after the full moon, and if there's any effects from this, you certainly would be able to to make a better idea. The Fed juice is still moving, and they're still pumping it in. So there's no change there. He was looking for, as I recall from the last time we had Shane on, he was looking for around October the 6th. That's tomorrow. And so that's another one. It's a day off from the full moon. Remember, you got an orb of 3 days on the moon. So that's neither here nor there of what we're watching. So just keep a close eye on it, because that's what we're really looking at here. So, all right, let's just move on to the bonds here. We're trading at 152.12. Yesterday's low was 152.08. Taking that out, folks, sets up breaking the 152 level. And if we break 152 level after being here for a week, this sets up your 151 and change level without any trouble at all. If it gets much below 152, you don't want to be long to bonds, that's for sure. And that would be positive to the currency, I would think. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's put up the chart of the heating oil here. We were talking about it earlier, and I tried to look at it a little bit closer here. And as you'll notice, there is an ABCD structure, a very small one from yesterday, where the market rallied up to 179. It backed off about 2 cents, and that led it up to this 150 level here at the right at the 180 level. Now, if you wanted to try the short side of heating oil right there, your stop would have to be above the 618, so you're going to have to risk a penny and a half in that, which is about $600. Frankly, what I would do is I would wait for the 61% retracement. If you're really bearish, the heating oil, this is a spot to nibble at it, and it wouldn't have to risk very much. I wouldn't wouldn't risk more than a penny in that if you were able to do it. But you'd like to see a more clear-cut ABCD pattern than this one. The problem is the BC swing is just barely a penny and a half in heating oil, which is not very much. So that's what I would be looking at. But anyway, that's the level to look at for today is this 180.25, and we'll look at it tomorrow and see what happens. But you'd like to see a really clear ABCD pattern, and then you've got like a perfect one like we see in the Dow Jones Industrial Average. That's a beautiful ABCD, and there's 3 of them there, making it a 3 drive to a top pattern, very similar to what we had in March the 5th of 2009. So tomorrow's going to be a very interesting day, being a anniversary date coming up from October the 7th of 2007. That was the day that Mr. Bernanke said everything looks green lights on the financial markets, and that was the day the market turned down. And from there we went down to, we dropped 80%, 85% in the NASDAQ, and about 80% in some of the other markets. But they don't react like that anymore because fear and greed don't make any difference. Who loves you, baby? Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.